Hey everyone, it's Louisa. I hope you're all doing great. And I've missed you guys. I haven't posted for probably a week or so, and I have a few reasons for that. As you probably are aware, Canada just had its national election, so I've been a little busy with that, and we're at end of tax season. So, but I wanted to kind of go through the trades I took this morning. Of course, it's a high volatility day. So I had some losses in the beginning, and then I had a great trade later in the morning, which is the key one that I kind of want to share with you. But the theme of this video is what to do when you feel like you've missed the move. And this happens to me, all the time. I'm sure it happens to many of us. But when you miss the move and you're only taking, a few trades a week, you really feel kind of bummed out about it. But this video is going to show with patience how you can turn that around and actually have a great trade and maybe even a better trade than the original one. So with that, let's jump into it. Looking at Asia and London through the evening, both of these sessions ranged, which means that there's a definitive high and low. So London came up here early this morning at about 8:10, and I thought to myself that this could be manipulation here, but that's just what was kind of running through my mind, that this may be manipulation here. And if so, when price came down and came back up, I was thinking that this might be a good entry level to go short. But of course, when we have news, and pretty volatile news, especially this week, that this trade idea didn't work out, but it's something that this kind of setup is something that I look for routinely. Now, if most of you who follow me know that in the mornings I trade the break and retest on the 5-minute candle. So this morning I had 3 losses with the break and retest, and I have since updated my trading rules strategy that I will no longer be trading break and retest on high impact news mornings. And it's just they never seem to work out for me, so I think I just need to eliminate them from my trading. Yesterday morning I had 3 positive break and retest trades, and then this morning I had 3 negative. So what's the point of having your gains early in the week and then losing them later in the week? So anyway, I just want you to be aware that on my notes here that I keep beside me when I'm trading, I know it's kind of rudimentary, but this is what works for me. These are my key rules that I have to abide by. And so I've updated now that no trade, no Scarface 5-minute break and retest on red folder days, period. So that's done. So I want to show you what then I was looking for once I discarded the 5 minutes. So I'm just going to take the 5-minute levels off of here, and let's move to what I did see next. So right now I'm on the 5-minute chart here, and you guys also know that I like to wait for a 5-minute break of structure. And then I look for displacement, fair value gap, and then I look to go long or short. And additional confluences that I like to have is breaker block and SMT, and that's basically what I'm looking for. Now, all of those things came together this morning, but I did not take the trade because I'd already taken 3 losses on the break and retest, so I was in no rush to even think about entering another trade. In fact, that's one of my trading rules. So, but I just want to show you here what the 5-minute break of structure looks like. So here we have our high. So we have an up candle followed by a down candle. So this is a 5-minute break of structure. break of structure right here. I'm going to change it to a nice bright color so you can see it. And let's make this a little bit larger just to make it easier for you guys to see. So this is the 5-minute break of structure here. So once we get a 5-minute break of structure and we have some additional confluences, so I'm just going to write this out for you. So we have a 5-minute break of structure. Then we have a breaker block. So here's our low, high, lower, low. So we've got a breaker block. We have a first fair value gap that became inverted, which is ICT's first fair value gap. So we have that. I did not have an SMT, or not one that was obvious to me, so that didn't factor into it. And once I have these on my chart and beginning to present itself to me, then I move down to the 1 minute and I look for an entry. And the entry, now here we are in the 1 minute. So here's our 5-minute break of structure. So our entry could have been on the inverted fair value gap, which would have been here. That would have been a nice entry. If we had waited for the fair value gap down here to be revisited, we would have missed the trade. But this, in essence, here was, so break of structure, tap back into the inverted fair value gap, and then go. I missed this move. I saw it, but I decided not to take it because I became a little bit hesitant after I had those losses this morning. So what I did instead was I watched price move up. And what I do when I have price move up is I just monitor it. And I put lines across for the higher highs. I put in the fair value gaps. Here's the 5-minute fair value gap that I put in. And I just basically put my levels in of higher highs, higher highs. And what I'm doing is I've missed the move. I'm not going to jump into the move when it's, already 50% of the way up there. That just doesn't make sense. But I'm going to monitor it and look for a potential reversal around like 11:30. That kind of time is when we get to see a reversal on the market. So I'm just basically watching YouTube videos and just marking up my chart. And I'm waiting for the moment when price around that time makes its move. And as we can see here at 11:19, we had beautiful displacement down. Okay, so we have beautiful displacement down. And this fair value gap forms here. And this was on the 1 minute. I'll make that a little bit bigger. So with this kind of displacement, and again, I'm looking for the same things. I'm looking for a 5-minute break of structure. I'm looking for an inverted fair value gap or a regular fair value gap. And I'm looking for any sign that liquidity has been taken. And this candle here with this long wick indicated to me we came up, we wicked liquidity, and price was ready to do a turnaround. Now at this point, what I'm interested in using is ICT's optimal trade entry. Make this a little bit bigger for you guys. ICT's optimal trade entry strategy at this point. And I'm going to take you through what that is, because if you've never used it or you're unfamiliar with it, it is pure gold. Like it's pure gold. So you're going to need your Fibonacci, and I'm going to share the Fibonacci settings after I take you through this trade. So here we have this fair value gap that formed on the 1 minute, and between here and this fair value gap we had a balanced price range. So a balanced price range in here. On this side, and on this side we also had a balanced price range. So I like to see a balanced price range on both sides, which is a confluence that price will not want to move higher. It doesn't have any need to move higher because it's a balanced price range. So then I'm taking my Fibonacci So I'll just write this here. I'm going to take my Fibonacci and I'm going to look for the optimal trade entry, which is where price could return back to. And so I'll just do it fresh for you. I took the low from this morning. So the low from this morning to the highest price range here. And then I have my optimal trade entry settings. Now the optimal trade entry settings I'll do for you at the end of the video. So if you want to create your optimal trade settings, you'll have them. And basically, optimal trade entry is when price moves in a certain direction for a certain period of time, it's going to pull back. And so these Fibonacci settings show us where price could potentially move back to. And ideally, price is going to move back to between 62 and 79%. So you can see here, here's my 62%, 61.8, and here's my 79%. So when price is reversing, in my view, I'm thinking this is where price would ideally want to come down to. Now we have the 50% range as well, but 62 to 79% would be ideally where price wants to return to. So I entered the trade here, and I will put that on after, but this is where I entered the trade. It's right here. And I basically just wrote it down. I pyramided out because I entered with 4 micros, and you'll be able to see where I pyramided out. When I'm writing price down or up, I like to put in the fair value gaps. Here, I was watching to see price reaction on this 5-minute BISI on the way up, and you can see that when price blew through it, and my dog here wants to say hi. Price kind of blew through it, and then it became an inverted fair value gap. So that was nice just to kind of stay in the trade. And then we've also got this first fair value gap, ICT first fair value gap that formed in the morning, and we know that price the algorithm likes to return us to that area. But here we can see that between the 61 and 79%, this is the OTE area. Okay, so this is our OTE area in here, 62 to 79%. And price came right into this area along with revisiting the first fair value gap. So this was just a beautiful trade. It was 129 points for me. So it was 129 points. And in terms of risk to reward, let's just do, let's first of all just show you where the trade was. You can see here, these are my 3 trades that did not work out this morning on my break and retest. And here's where I entered the trade. So I entered the trade at 20.079. I bought one back here. I bought one back here. I bought let's see, 1, 2, 3. Where's the 4th one? Here it is, 1, 2, and 3, and then I left one runner, the 4th one, down to here. So if we were to take our short, my stop loss was on the fair value gap, just at the top of the 3rd candle. I guess it would be the 1st candle, so my stop was there, and then we came all the way down to here, so that was 21 risk to reward. But let's be fair, because I pyramid out, it's not exactly 129 points. I'd have to like do the calculations, but the whole run from beginning to end was 129 points, and the whole run was 21 risk to reward, which is fantastic. With almost, I mean, it's really really low risk. Because my stop loss was just above the first candle of this fair value gap. So very, very high risk to reward trade, and just played out really, really nicely. So I just want to share with you now the Fibonacci settings in case you don't use this or haven't, or you're not aware of this strategy by ICT, but I use my Fibonacci almost in every trade I take. And you can use the optimal trade entry Fibonacci as a very technical, mechanical way to trade. You know, you can set a limit order between the 62 to 79% to get into a trade, and you can also use that as kind of like your exit. And what's really, really interesting and fantastic about this strategy, the optimal trade entry strategy, is the more you use it, you'll see that within the 62 to 79%, there will generally be another PD array which overlays the area that you're looking at. So for instance, here's our 62 to 79%. Well, we've got a fair value gap right inside there. So it gives us added confluence that this would either be the area to exit the trade or to jump into the trade. So anyway, I wanted to share this trade with you. I'm sorry that I've been a little bit absent. I am really working hard on redefining my trading strategies, my rules. I'm becoming much, much more strict about how I'm trading. And I'm realizing that I am probably a little better in these longer trades than I am on the scalping type trades. You know that I do both, but this is kind of like my love, is these longer trades, and I'm really drawn towards them. I'm going to continue to trade the break and retest because it is a high risk to reward strategy, but I'm nixing them on red folder days. So just want you to be aware of that. So anyway, guys, I hope that you're staying safe during this non-farm payroll week. I will not be trading tomorrow. That's one of my rules. I don't trade the Friday. It's just not... I just think there's better days to trade. Better days are coming next week. So we'll just leave it at that for the week, and I will see you guys again next week. Okay, peace out. Take care. Bye for now.